And let's get I'm going to ask you guys a real quick question that I didn't say I was going to ask you real quick as we get started here. Of course, everybody knows there's a lot of risk in the market, and we come here week after week. We show you ideas, how we're looking at the market, some ideas, how we've looked at it in the past, but there's no guarantees on any of it. And we really want you to do is make sure you protect your capital, because when you click that mouse, your capital is out there and you want to protect it. So with that, we kind of try to cover a lot of trading ideas, strategies, give you some market analysis, and talk about trends. We're going to do that here just now. So real quick, guys, just your real quick take on, if you have a real quick take on the Jackson hole or the market, just, 60 seconds. What do you think, Jeffrey Turnmeyer?
Well, I mean, right there, like that kind of sums it up. You got the nice peaceful on one side right over here and the monster on the other side. And, which way is it going to take the market? Is it a friendly monster or is it not? I mean, so far, the volatility is crazy today. And I think that's really what we talked about, was volatility was going to increase through August. And that's not necessarily VIX popping. That's big moves in the market. Up and down is volatility. That's realized volatility. And that's exactly what we're getting. I mean, it's what we're seeing.
I love that picture. You're gonna have to sell those backgrounds, I'm telling you. What are your thoughts real quick, Roger?
I think that there's absolutely no surprise. As a matter of fact, if you look at the bond market after the announcement, it barely moved. And it's just telling us that they're in a pickle right now. They're in a pickle. Last quarter, the market was under the cloud that there was not going to be any more rate hikes. Now they're under the cloud that there will be rate hikes. But nothing changed from last quarter to this quarter. They keep saying the same thing, but people keep interpreting it in different ways.
True.
They are simply the fact that they're not doing anything, no action and inaction and taking action later are two different. Basically, what I'm trying to get to is the fact that they're waiting to see what happens doesn't mean they're not going to do anything. They're just waiting to see the impact of the interest rate hikes that they've made continuously over time. And they keep saying it in 100 different ways, but they keep saying the same thing. We're waiting and seeing to see what happens next. I mean, here, I'm quoting him this morning. Federal Reserve is prepared to hike rates more if needed.
Whoa.
Yeah. Proceed carefully as we decide whether to tighten further or instead to hold policy, await further data. Nobody's saying we're not going to raise, we're done. They're going to raise rates because we're not at the 2% target.
Yeah.
So by spreading it out and giving a little time, they're trying to get the emotions to settle down. They don't want to tell people, hey, the odds are about 95.9% we're going to raise rates, but we don't know for sure. They don't want to do that. So instead they're just like, we're going to wait and see what happens.
Yeah.
But the bottom line is, it's very clear what's going to happen to anybody who knows anything about the markets. They're not anywhere near 2%. China's getting only worse. Global economy is not picking up. The AI thing has bye-bye. We said, but that's all gone. Now what? All the sectors are down. What are they going to do now? It is what it is. We've been talking about this for months and months and months.
Well, let's talk about how to trade it. How about we do that? I'm going to share my screen. Let's talk about some of our ideas, kind of how we're, seeing the market. What are, best things kind of going forward in this kind of pullback? Is that going to continue? Is it not? I just pulled up this screenshot from the roadmap software. I was just talking earlier this week how this is that, if you can see my cursor there kind of in the middle, that's where that NVIDIA, shot up. And then we have come back down. Now, this isn't a recent picture. This isn't since the Fed news coming out from the hole, but we're talking about this whole 4350 area. I noticed that it did go down to 4365, kind of touch that and kind of pull back up off of that, but just key levels to keep your eye on. But how do we trade these markets? I think some of the best ways are, if you go in and out, if you're doing short trades, me personally, if I'm going to do a short trade, I want it to be really quick, because I think that overall the markets are going to go up. So I was just pointing out like Lennar, home builder being great, for the year, but these pullbacks and that Lennar, the strength of the home builders surprised some people. But when you dug down underneath, you kind of, got a good idea, but they have pulled back. But I think those trades on those types of tickers have to be really quick. You get in, you get your money, and you just go to the sidelines on those. So like here, Lennar, I was writing about this one, this just quick pull down here. Same thing with DraftKings. It was just a real quick pull down. You come over here to the right side of the screen, you get that little pullback, you take your money, and you're very happy with that. I thought this was interesting. I pulled this from Bespoke. This is the biggest contributors year to date. A lot of this isn't going to surprise anybody, but what I think is interesting about this, when you think about ideas of how to trade these markets and what to do, get prepared. I think you want to kind of start thinking about processes. What you do is you stick with, first of all, the first thing you do is you stick with processes that work and that have an historical background, a proven track record, and you keep trading those. So yeah, you can take advantage of some of those quick pullbacks, but what you really want to stay focused on are those trading ideas, those systems, those process, those algos. I'm so huge on those algos right now. Keep trading those repeatable patterns. Like, I've got the one True Trend Pro goes back to the Great Depression. I love that. It's a great process. You keep doing it. It's fantastic. It's great in times like this. Other types of repeatable patterns, but I pulled this up. I thought it was interesting to take a look. Again, no big surprises with NVIDIA up there year to date. Change, a great trade for people. But what I'm looking at are some of the others that don't make the headlines so much. And if you go down, fall down from here, of course, you got Meta, you got Tesla at 90, but then you jump down here to General Electric, 71% up, year to date. And there's a lot of reasons behind that. I'm going to talk about that here in just a second. But the trends, looking at some of these that are in that 50% and doing some homework, this is a great time to do some homework, get the calm about your head, and try to start thinking about what the next trends are going to be. We're going to talk about that a little bit as well. So you can take a snapshot of those, do some homework on those. But then here's another one. These are the ones that are the biggest contributors to the S&P month to date, and their contribution to the S&P. And there you got Eli Lilly up there, number one month to date. When the market is pulling back, Lilly is still going up. There's a reason behind it. And that's why I think it's so important to understand kind of these other opportunities. We get so bogged down with headlines about, what's going on with Jackson Hole, what, everything, that we forget that we are traders and that there are lots of opportunities out there and you can take advantage of them. So I think that's another one to take a picture of and take a look at some of these companies that have made this list. So another thing I think is really cool to do, this comes from the Roadmap software. I was just talking to Jeff Smith and we were looking at some of these earlier, but that this is a 2% or more move for the month. And no surprise, like you have Lilly on there, US Steel, you got to do some research on some of those tickers, but just to have an idea, some things to do when a market is pulling back, what stocks are moving up and why. Like you've got, Excel, another healthcare kind of stock, but I just kind of wanted to show you that as some ideas that I'm looking at. And then I want to get your ideas, Jeff and Roger, some things that you are looking at. What are your best trading ideas right now? How about you?
Go ahead, Jeffrey.
All right. Let me take a little diversion really quickly and share my screen, and let's just talk about, you were talking about Lennar and maybe DR Horton in there. Look at this. This is an interesting thing right here. We're going to segue into housing, but the blue line on the top is our prime age working population. That's 25 to 50-year-olds in the US. And we're at about 128 million people right now in that prime age. The big red in there that really catches your eye is the federal debt from 1966 to current. You see how it's exponentially grown in there, while the population not so much. And we also have the 25 to 50-year-olds that are employed, which is only about 103 million out of the 128 million. So the economy is supporting about 25 million of our prime age working people just kind of not working. It's kind of interesting. And the Fed balance sheet down here at $8 trillion. And then, of course, we have the FFR percent rate hanging out there, the federal funds rate at 5%. So That's all kind of marked on one chart, just kind of blending it all together. Now, how does this relate to housing? Well,
That's a great chart, by the way.
over the last, say, 4 years, from 2019, when we didn't really have this housing problem that mainstream media was talking about, to now, we've added about 4 million people to our population here in the United States. In that same period of time, we've added 5 million housing units. So 25% more housing units than we've had population in the last 4 years. Yet we're having some kind of shortage. Does this really make sense? What's going on? I've been digging into this lately, and it would appear that the real crux of the matter is investor home purchases.
Oh, yeah.
That really is coming from Airbnb. Think about it. My parents, the street I grew up on, like, it's not really a neighborhood street or anything like that, but it is close to the campus here, University of Tennessee, home of the Vols. But like 5 of the houses on that street have been bought up, and they're just Airbnbs. They're no longer residences, really. They're Airbnbs. And so you're seeing that housing being taken up through Airbnb investors, and then other investors, if your retirement account at all invests in residential properties and rentals, you're actually contributing to the shortage of housing that we have right now. I think at some point this is going to come to a head. It came to a head back here, and we saw a large decline in investor money flowing into houses in 2005 through the bottom in 2009. And then we saw another spike, and lots of money came in during COVID, the record printing. Back to the first chart we were showing, we added $6 trillion in federal debt in a very short period of time during COVID, the fallout of COVID. And a lot of that money went into the top 10% in their investment in rental properties and taking it out of the residential market for people like those prime age workers that want to afford a house and raise a family. So am I saying this is all coming apart? Well, it's a problem. It's a problem we're going to deal with. These are things I'm watching now that are going to come to head later. Now, another thing I've had my eye on is, I'll stop my screen share here and just talk to everybody for a second. Another thing, you were talking about Lilly, and right on the back, if you don't know what's going on, Lilly has a weight loss drug that suppresses appetite. The average person going on to those weight loss drugs, and the Nova Disc, Nova, whatever, Nova is the competitor, Nora Nova Disc, and they have, I guess it's Majoran and whatever, the Ozempic, and there's like 3 or 4, Wegovy, there's like 5 or 6, there's getting to be a whole bunch more that are coming out. They're in the pipeline. Those are going to be huge. Now, the thing to watch, though, is if side effects start creeping in. If side effects start creeping in, think about back in the early 2000s, there was a huge weight loss drug. Everybody was getting on it. And then side effects started, and then everybody dropped that sucker like, immediately. So if side effects start coming into those Wegovy's and Ozempics and stuff like that, short the crap out of Lilly and Nova Disc and stuff like that. Otherwise, these are money printing machines. I mean, the average person that goes on it, average person, male and female combined, sucks in about 3,500 calories a day. And then once they start on those weight loss drugs, they drop their intake by 1,250 calories a day on average, just 6 weeks in or something like that. And that's why you're getting huge weight loss and that appetite suppressant. It's huge news. I mean, if you haven't looked into it, you really should. On Lilly, the move's already started, and it can just accelerate, though, as more of the as they ramp up their ability to supply more drugs. Nova is right there behind them too. It's a huge increase in their stock price, and those are huge opportunities. Now, moving on into other segments, though, huge things that have been up this year: crypto, like Bitcoin,
Yes.
like up huge this year.
Mhm.
And if everybody's been talking about Nvidia and AI and Nvidia, this, that, and the other, but look at crypto. I mean, we're up 70 something percent off the bottom, off the lows from, maybe more than that. I can't keep up with the moves lately. It seems like it's moving so much and so fast. We are in a pullback, just like the market, and it does tend to behave as a risk on, risk off asset. If we start rallying in the market again, you can bet Bitcoin and Ethereum are going to take off. And I think Roger and I are going to present a little opportunity for you to get in on that here at 1 o'clock
That's
after
right.
this is all over.
I can hardly wait. Got the experts here. We brought in the big guys to bring this. I love it. Perfect timing. Perfect timing. Roger, what are your thoughts? You know,
So let me and again, I'm going to come off a little bit like the Grim Reaper here,
Huh?
and I hope I please don't take what I say as the gospel, but I'm telling you folks that I'm not happy with what I'm seeing right now. I'm not happy at all. I was actually looking at my stock fetcher this morning, and I was looking at all the major sectors. And I mean, I've got everything here. I've got the S&P, the NASDAQ, the financial, everything you could imagine. Not everything, but the big ones. And everything. I mean, everything looks like it's breaking down. Everything looks weaker. Everything looks terrible. Even energies. I mean, if you look at energies here, they look like they're coming up here, but they broke that by a little bit, which could be a pullback, but they broke the major trend line. Healthcare broke the major trend line. And also, if we were to take a closer look, like for example, even energies, you'll see that they broke the trend line before making new highs again. And that's a big problem. So for example, if you look at energies, they never made a new high before coming back down. If they made a new high, that would be a continuation trend. But in this case, they're kind of back in this area. And if you look at healthcare, and the reason why I'm talking about healthcare and energies, I'm not signaling them out. The reason I'm doing that is because those are the best performing sectors right now. So if these are the best performing sectors, neither of them can take out the previous high, you see? And that's a major problem. Now, when you couple that with the fact that the bond market continues to break down and isn't finding a lot of support right here, and right now it looks like it's about to come right back down and fill this gap. Notice today, Powell spoke, nothing. You couldn't even tell he spoke today. You never see that, right?
true.
I didn't
Very
even,
true.
I wanted to wait and sell bonds. But I said, you know what? I'm going to wait after Powell speaks, because I thought it was going to cause a lot of volatility. Nothing. I mean, like 2 days ago is more than now. I mean, and this is a major event. I think because I think what he said is so baked into the market. And I think this reaction here already kind of signified that. This is a very powerful sell-off. This is what happened when the bond market discovered that things are not, in fact, close to what the Fed has been representing to us. So I think we're going to have more downside. And if we do, let me bring this a little closer. You could see we haven't gone to this trend here at the bottom, but that's where I'm gauging. Now, as the bond market goes down, you get increased pressure. It's like, imagine a 900-pound gorilla sitting on your back. All right. And imagine you're a tech stock, and imagine you weigh, 2,000 pounds, a ton. But as the bond market goes down, you start losing weight. You start getting that Ozempic. You start going on the weight loss drug, and you start weighing less. You start weighing half a ton, then a quarter of a ton. Well, if you weigh a quarter of a ton, you now weigh 500 pounds. You're not going to be able to hold on to a 900-pound gorilla. Now, I know I'm making simple examples and making light of this, but this is not funny, because if the bond market goes down, that tech will break. And the problem is, here's the big problem with all of this. Take a look at Microsoft, for example. Now, we're talking big stocks here, right? Here, let me show you this. We sold off when the bonds sold off. We couldn't even get a rally up to here. Nothing. I mean, no soup. I mean, if this doesn't look like the beginning of a downtrend, I don't know what is. But here's the problem. The problem is you don't have real major support all the way down till down here. Now, that's going to take a big market cap from the stock market. How about NVIDIA? And again, I'm not trying to scare you. I'm trying to be realistic with you.
Yeah.
Look at the weekly chart on NVIDIA. This is scary. The 2 levels down, and you're at 280 from 450. There's nothing holding this thing. And where does this thing begin to base out? Let me show you. Around, I would say, right around here somewhere, if I had to guess, 230. So how about Meta?
Hey, Roger, before you go on from NVIDIA, it does have a history of making 30% pullbacks too. Like
Yeah,
people are like,
matter.
no way it could pull 30%. I'm like, go look at the
Yeah,
chart and just scroll back. You can,
sure it can. Sure, of
it will
course
do
it
it very
can.
quickly.
Very quickly. Absolutely true. Very true. And look at Meta. I'm not seeing anything good anywhere. See, and here's the problem, Celeste and Jeffrey. This is what I was talking about. I didn't even know about this about the rallies that just happened didn't take us to the previous highs.
Yeah.
That's a big problem. So
Yes,
so
it
here's
is.
the thing. Let's say it starts selling off, hypothetically. Not hypothetically, it's selling off right now pretty hard. But let's say it starts selling off and it goes down here, and you look at this chart. Oh, this will just look like a move against the trend. This is not going to look like a rally. This is just going to look like a move against the trend, starting a new downtrend here, which will be obvious. So healthcare, energies, Meta, all these other stocks. So I'm trying to show you guys, and again, I don't have a bone in this, that things are not looking all that great right now. Now, I could be totally wrong, but same thing here. See, none of these stocks took out the high. Let's see if Google did. I think Google might have.
Very good analysis.
And that's a major fundamental.
Yes,
I mean,
it
it's
is.
still technical, but that's a major fundamental See, didn't do it. None of them could go high. So ultimately, this rally that we just had, which a lot of folks called the new market rally, the new bull market, the new this, the new that, it's basically a trend against the main trend. That's all it is at this point. So I would be very cautious. I would be very, very cautious. And I wouldn't be looking for the Fed to save you, because if you do, they're going to be saying, what do we say? We never said that.
Yeah. Mm-hmm.
You know,
Good.
so I'm very nervous about the market right now. Now, do I think we're going to crash and burn? And no. Let me tell you, I think there's a really good chance, Celeste. I don't mean to interrupt you. I'm sorry. I know you
Oh,
keep.
no, you're good. I was going to ask you another question, so you're good.
So I don't necessarily think we're going to crash and burn or anything like that, but I do think it's very realistic for us to come down to these levels. And by the way, I drew these levels a very long time ago here. They were not drawn yesterday or 2 days ago. I drew these levels probably months ago. Nothing changed. Yeah, go ahead.
Yep. No, I was just going to say, so, keep that going. What are you seeing seasonally coming up for us? Finish up what you're talking about. I don't even mean to interrupt.
No. What I was saying was, I think seasonality. Well, and oh boy, you just added another layer to the thing. Here's the problem. September is not a good month seasonally. September is not a good month seasonally. October starts getting into a good month, but September's not a good month. So I'm not, and we all know August is not a great month, simply for the fact that there's just not a lot of liquidity, not a lot of volatility. Things are only now starting to heat up, but August and September are not good months. So week to week, I have, and before we conclude here today, I'll show you my seasonality chart for the next week. But I'm not seeing anything, and here's what's really worrying me, Celeste. Usually, sometimes, most of the time, I could find a rose in all of this. I could find the needle in the haystack. Right now, the only things that I'm looking at are like mid-cap stocks, a couple that don't have a lot of liquidity, stocks you've never heard of. I'm not seeing anything great right now. I'm not seeing anything that I'm really excited about right now. I'm excited about a lot of stocks to the downside. I'm excited about PayPal, Baidu, but I'm not excited about those stocks to the upside. So I don't think seasonality is going to help. I don't think seasonality is going to give us much tailwind in the next 30 to 45 days, because it's not a seasonally strong time for stocks to begin with. And number two, we have this nasty shadow from the Fed, and they're starting to get closer to the truth. I think by November, December, what we say and what they say will finally align. But they're buying time. They don't want to cause a panic. They truly don't know what's going to happen. They truly don't know the impact of what they have done. Nobody has, because they can't predict the future. I mean, if they had a crystal ball like I have here, maybe they'd be able to. But you know what I mean? They're clueless right now. What they're doing is this. They're sitting there going, let's hope the numbers improve. Let's hope the numbers improve. If they don't improve, we're going to have shit show. Excuse my French. But that's what they're saying. That's what they're saying. They're sitting amongst themselves.
Behind the doors.
That's what they're doing right now. I mean, you don't have to really read between the lines to see. I mean, the comments I made in my morning video is just quoting what they were saying. We're going to see what's going to happen. We want to wait. We're not at 2%. It's stickier than we thought. All this tells me they're not done yet.
Well, this would be a great time, Roger, actually, if you would go ahead and show us your seasonality that you're looking at for next week. We'd love to see that.
Yeah, let me do that right now. Okay, here we go.
Tell it like it is. That's what the lady is saying.
Well, I'm just trying to be as honest with you as possible.
That's why you're here.
I don't have any bone in this. I don't have any agenda. I don't have. I'm just being honest with you. By the way, take a look at this real quick. This picture right here. This is a real house.
Oh, wow.
That's a real house. No
That's
joke.
awesome.
That's a real house. Oops, that's Clyde. Hold on. We don't have Clyde here.
They copied from Clyde.
Yeah.
It looks like one of those Airbnb specials.
Really does.
So here's the seasonality. Here's the seasonality for here's the seasonality for next week. And you could see here that we start off kind of soft, but we end next week on a really good note. And this is all the indices here: the Dow, the QQQ, and the SPY. I should probably add Russell to here now that I think about it. But the ending of next week is pretty good. The beginning of next week is not.
That's the end of the month.
That's the end of the month.
Yep.
That's the end of the month. So I'm not the two sectors that I was really liking a lot were the healthcare sector, Celeste, and the energy sector. And there's still a few stocks that I'm liking in those sectors, but here's the problem. If we go into a recession, those sectors, they're inflationary happy, but they're not recession happy. So what I'm hoping for is that the data starts getting substantially better in middle of September, early October, and that could shift us to positive earnings season. The really good thing is earnings didn't fall out of the boat. They didn't fall from the sky. They were very moderate. They were very contained. We had some positive forward-looking statements. But again, revenue, I don't know if you've noticed revenue, even with all of these expectations, revenue was only about 60% better. Next quarter is going to be the maker or the breaker, because what's priced into the market right now, and this is something you folks should pay attention to, what's priced into the market as we speak, what's baked in really deep is the fact that earnings are going to start turning positive the quarter after next. So if we start seeing in the next 2.5 months, and it's only 2.5 months away, if we start seeing in the next 2.5 months that the odds of that are not realistic, that's going to be a huge 1-2 punch for the market. A huge 1-2 punch for the market, because that is so ingrained in the market. That is like the weekly data would be impacted by that.
Yeah. Interesting. Very good. Thanks for all of that, Roger. Let's move on a little bit here. Jeffrey, I want to get your comments on that, but I also want to know, Jeffrey, a little bit more about these trends that you're seeing, particularly in Bitcoin. And Roger, if you have anything to chime in on that too as well. But let's switch over to that. Let's talk about these trends, Jeffrey, or anything else you want to add to the conversation.
Yeah. So Bitcoin has a 4-year cycle. Just maybe throw this out there. This might be brand new news to some people. If you've been here on Ask the Pros, you've probably heard me talk about this before. It has a 4-year cycle. It's called the halving cycle. Now, what that really means is Bitcoin, every 10 minutes on average, sometimes it's 9, sometimes it's 11, but roughly every 10 minutes, there is a new block of Bitcoin minted. It's called the blockchain. You've heard that terminology in the mainstream media. It's a ledger that every piece of the new ledger, every block, is built upon the last block. And to mine that new block, a cryptographic problem has to be solved, which cryptographic, the little lock on your web browser, that's cryptography. The problem they solve and authenticate the transactions is, all related to that. They use something called the SHA-256 algorithm. That's the hash rate you hear about. It's an algorithm that hashes the transactions and creates the new block, authenticates the new block. Now, every 250,000 blocks that get created, which tends to be about 4 years when you do it every 10 minutes, the pay rate for mining a block of Bitcoin gets cut in half. We started out getting tons of Bitcoin. Now we're down to like 3.125 Bitcoins every block. And we're going to cut that in half coming up in March, April next year. That's the next one. The last one was during COVID. The next one happens, next year. So what happened during COVID? We all remember Bitcoin went crazy high. If you've been trading at all, you know that, Bitcoin rallied strongly after that halving event. Maybe you didn't know it was the halving event, but it rallied strongly all the way into late 2021. And the 2022, it sucked. I mean, if you're a crypto investor, you're probably sitting there going, oh my gosh, I just lost all my money. If you were a buy and holder, especially if you bought at the top. Now, Roger and I kind of worked together. I uncovered a pattern. Roger helped me back test it. And at 1 o'clock, we're going to be talking about this monthly pattern that shows up in Bitcoin that has shown the ability to outperform that buy and hold. It performed all the way through 2022. And in fact, Roger helped me pull the data all the way back to when Bitcoin was $100 and test this monthly pattern over and over. And we're going live at 1 o'clock to talk about it and share all the details. So this thing is one reliable pattern that you can exploit in the market through the ups and the downs and consistently pay out.
And I just want to add, when you watch the class, for those that haven't watched the class, when you understand, when you hear Jeffrey's explanation and how he was able to backtrack the cause of it, you will have a real big aha moment, because it really makes like perfect sense when you understand the whole thing behind it. It's not like one of those, the stars have to align or the moon has to, it's not one of those things. It's based on I didn't know that when we were working on it, but afterwards Jeffrey came up to me. He's like, hey, you know what? I just kind of put the two and two together and it made perfect sense. So it's based on a very grounded fundamental factor that is actually very interesting and something nobody would ever think about. But Jeffrey figured it out, and it's really great. And you guys should attend. You will learn something new and fascinating that you never knew. And nobody's talking about this. It's very, very cool. It's very interesting, and I highly recommend that anybody who hasn't come to it, or even if you have, please stop by. It's going to happen at 1 o'clock, and we look forward to seeing you guys there. It's going to be a lot of fun.
Yeah, so far we've had 4 halving events so far in the history, and all 4 have been very bullish for Bitcoin so far. So
I do have a question for you, Jeffrey. Actually, this is a good question for you because, well, I think I have the answer, but I want to hear what you think. So in this last kind of, I don't want to say this last downdraft in the market, the one that started a while back, there was a lot of correlation when it first started between most cryptos, and technology. And when technology went down, crypto went down. So what I'm curious about, do you think this is going to continue, or do you think it was a coincidence, or do you think they're related? And the reason why I'm asking this question is because I'm fearful that technology is going to have a downturn based on my analysis. So I want to know what you think about that in light of cryptos.
Great question.
I think in a lot of the market, there are correlations, and there's correlations that are correlations as long as they hold, and then all of a sudden they stop working. You see this all over the market. Like, people are like, well, when the market's going down, gold should be spiking. And that used to happen a lot.
All right, but not as much anymore. Right.
Not as
Very
much
good
anymore.
Point. That's a good point.
Crypto is very much a risk on, risk off asset. And I think you could make the point that technology is very much a risk on, risk off asset. So when you've got the market piling in risk, like it's game on, risk, time to risk your money to make the big gains. I think you see tech and Bitcoin flying parallel. That doesn't mean you can't see rotation out of one and into the other, or, vice versa.
But you're
money's always moving.
But you're not seeing any specific fundamental correlation. I agree with you. I think it's more of just like it was there for a time because a lot of tech investors were thinking this was going to go down there, but I don't think there's any fundamental aspect to it. Do you?
No, not really. And excuse me a second there. One of the things during the whole 21 bull market thing, if Bitcoin and Ethereum were up in the morning, you could almost guarantee that the market was going to be up by the end of the day. And vice versa. If Bitcoin and Ethereum were down together, you could almost guarantee that the market was going to have a red day. That held almost the entirety of late 2020 into 2021. I mean, it was almost like I had followers that were like, oh, crypto's up, we're going to have a green day. Like, that was like, it was that easy. And all through 2022, though, that broke. Like that, it quit somewhere around November of 21, which is when NASDAQ kind of topped out. And that correlation just stopped. Like, all of a sudden you couldn't rely on crypto to predict the market. After 2 weeks, we just quit. It was like, oh, this didn't work anymore. So, correlations are correlations, but they're not necessarily causations.
Let me ask you another question. Now, if you're, I don't want you to give away the farm here, so don't do that. But let me ask you an interesting question. What about energy prices and utility and energy prices and the cost of cryptos?
That's interesting because energy is very much tied to, it takes energy to mine crypto, at least the proof of work crypto. Ethereum's moved over to proof of stake, a different concept at this point, and it's yet to prove itself fully. And I think that's one reason why we see Ethereum underperforming right now. But everything you get in life, you work for. I mean, think of it that way. And Ethereum went away from that proof of work, but energy is a substantial cost to creating crypto and verifying it, but it's also a substantial cost to just our way of life, managing the traditional financial system. Yeah. And
I just wanted to get your, it's an interesting question, right?
Yeah, it's interesting. And I do think it is a component of at least companies' ability to be in that business, creating and minting Bitcoin, especially the energy. Utilities maybe not as much, but it is a very energy intensive business to be in, and we're going to talk more about that during the presentation.
Yeah, of course.
We're going to post that link here in just a minute, but I'm going to share with you another trending opportunity. And if you can see my screen here, there we go, share before you all get going. And then we're going to post that link because I cannot wait to get all that information from these two experts. I mean, masterminds coming together. It's going to be phenomenal. So if you haven't already, you got to be there. It's going to be great. Well, there are other trends that are going on behind the scenes. Maybe some of you know of them. It's actually why I was so interested in General Electric back in October, and it has everything to do with nuclear energy. And I think it's a little bit of a hidden thing. When I was saying earlier, hey, do some homework while the market is pulling back, because I agree seasonally it is pulling back as well. It's a great time to start studying some of these things out, start looking at them, get educated, because I think you just might be surprised, just like some of you might have been surprised by Eli Lilly, that this nuclear energy is going to be a really, really hot thing. Now, I am not an engineer like Jeffrey, and I'm not a scientist, but I do live around some of them. So I get these bits and pieces from their ears, and it's just really, really excellent. I just thought this was curious that even Michigan, jumping on board. It's curious that actually both Republicans and Democrats support nuclear energy. So wrap your head around that. But before you go, I've got something to share. Let me see if I can get
and
to
Celeste,
it.
just to add to what you're saying, it's definitely moving in the right direction. I mean, even Tesla is now talking about how their battery and how there's going to be alternate different sources of alternate energy. We can't put it back in the box. So I think you're 100% right. But it's kind of ironic that even Michigan is getting in on it. You would never think Michigan. I want to see Alabama get in.
I know it is interesting. I am having trouble with my cursor here. I have just lost it here. So
yes, Celeste, I agree. I've been tracking Westinghouse. They have a nice SMR reactor that they're going to be packaging up for third world countries.
Let me ask a question here real quick, because I know we got to let you guys go. Adam, could you get into that Slack channel and get that that presentation, because I have just lost I've lost my mouse. I can't get that. So if you could grab that for me and
yeah, do you want me to share it?
Yeah, please go ahead and share it, and I'll just go through it. But while you're doing it, so sorry, Jeffrey, I didn't want to, but I do want to get you guys to that 1 o'clock as well too. So.
Oh, we've still got time. I mean, we're here, and energy is interesting. One of my top followers, Goose, who's Lieutenant Colonel Goose, he was in the he flew F-16s for the United States Air Force, and he knows a whole bunch of top secret stuff. And he's a firm believer that these small nuclear reactors that the military has and has been running. I mean, think about it. They put one of these things in a submarine, and it powers that submarine for its entire life. They never refuel it. They never do anything. And it runs that thing. It never has a problem. that we've yet to have a problem with them. If we can, and Westinghouse produces them, and if they can produce one that we can roll out worldwide, a couple thousand of these things installed where you see, everybody sees the substations. If you have one of these just parked at the substation, runs for 30 years, you ship it back to the factory to get refurbed and they just roll a new one in and plug it in. I mean, this could be a whole new technology that's sitting out there.
Well, and what Ken says is exactly the point that I'm making, is because it's the green, it's a very great green energy solution. And not a lot of people have not had time to, come to terms with that. But before we go, let me go ahead and get started here so I can get you guys out. I have prepared something for all of you for such time as this. So right now, we're entering into some very uncertain market conditions. We all know that. We talked about it. And so we can go to the next slide there, Adam. Thank you. So traders keep asking me, so where are we heading next? And are we approaching a recession? I have an opinion. And I have some key insights that you'll want to know before September rolls around. So you see, at the beginning of every month, you probably know this, I lay out a blueprint for my very own personal trading. I've shared it with you. I've shared it here. If you've been following my work for the past year, then I've nailed some pretty significant predictions. Let's take a look. Like, for example, in October, I went full boat. I went all in. I tried to write about it because of what I was seeing, the way I was interpreting the market and enjoying that. So that's where we go. There's mid-September in the S&P. That's prediction number one. How about the NASDAQ over that same time frame? We all know that pretty doggone good. So getting in at that key point, it's not about getting in at the bottom, it's about making money. And that's exactly what I did. So prediction number two, here we go. On May, I told people live in front of everybody here at the audience, hey, this is what I'm thinking is going to go on. This is where the market could go for the month of May. There it is. And that's how it moved over the next several weeks. Making that prediction, all based on my forecast formula. So you got the prediction and the reality. Then prediction number three, let's look at this one. So this comes from back in June here on Ask the Pros. I'm saying, hey, this downturn is coming. It is coming. Watch out for it. This is the way it's going to look. This is the way I'm interpreting it. Jeffrey, you were there. Jeff Smith was there. It was a great time. Oh. Yep. Prediction number three. You were there. I've got the recording. I can show it to you. But here's what happened. Boom. So it was great. Not too shabby at all. So if you've had access to that forecast in advance, how much better would your trading have been this summer? Could that have helped you? When you have a high probability plan in advance, you can really seize a ton of opportunity. And it's never been more critical to have this forecast in your hands than right now. There's a lot going on. I can't imagine facing these markets without my monthly forecast prepared in advance to help me navigate. And if you're here today, you don't have a clear specific plan for what comes next, well, I want to share my personal monthly forecast with you. And here's how it's going to be. So for the first time ever, I am inviting you to a live planning session, my personal September 2023 official forecast coming your way. So it's going to be on Thursday, August 31st at 4:05 p.m. Eastern time. So it'll be right after the market. And here's what we're going to talk about. We'll talk about why the unfavorable price action the second half of August has made me concerned for what it means for September. We alluded to that today. What traders, investors, and the so-called market experts are missing as it relates to interest rates, inflation, and opportunity. I want you to know about this. The full September calendar with its ups and its downs, the news, the seasons, the technicals, the fundamentals. I put them all together. And that's going to be my biggest September predictions and top trade setups, what I see. So, and today, you can lock in your virtual ticket for just $5, just $5. That's all it's going to take. And yeah, that's less than a cup of coffee.
Do it, folks.
Price, there you go.
Do
price
it.
Keeps going up. So it's a live planning session on September for my September analysis. Next week on Thursday, the last day of the month, boy, will I have something to say on that day at 4:05 p.m. when the market is closed. We're going to talk about all of those topics that I just listed, what I'm seeing now that has me concerned in September. I told you even in June about that. Now I have more information. You will get the same personal outlook I am planning for myself during our call to use at your own disposal. You can just go right there. The link is in the chat, and it's the basis of all of my high conviction investments throughout the month, including the one I made at Eli Lilly back in October for the very reason that Jeffrey outlined. And the exact formula, I've never done this before. I've never given anybody the exact formula that I use, but you're going to get it on August 31st at 4:05. If you can't be there, it will be recorded. So I have to ask, would
This is
having those
great.
predictions, would that be worth $5 to you?
A lot
Would it
more
be
than
worth-
$5, Celeste. And
Okay.
and you know, just want to point out, you're smart by doing this right before September, because as I mentioned earlier, September is not a good month for the market. So the fact that you're doing this right before September and gearing people up for a nasty market is a very, very smart way to do this. I appreciate you doing that. That's good.
Thank you. Thank you.
Yeah, historically, September is a month where we pop and then retrace it all plus some.
Mhm.
And I think having a game plan, and then Celeste has been right on track with me on a lot of predictions. So, you know,
her
it's probably
trade
worth
GE was my
probably worth way more than $5.
that GE trade was my favorite trade of the first half of 2023. So I love it. I love Celeste trades, folks. Do it for what can you do? $5. Come on, $5. You can't even get a coffee for $5 anymore.
Yeah.
You know?
Yeah. Yeah. Oh, it's great. I can't wait. You know that, yeah, this whole process is worth way more than $5 to me. I mean, add about 3 zeros to that, maybe another one. That's what it's worth to me over and over again. And so we're just going to really work out planning this just like I did for the summer. So get it. It's $5. You can click on that link. And if you think that kind of a game plan could really help you trading as the market gets more volatile, then join me for a live session. I'm not giving up. I've got more ideas. It's not just GE, it's not Lilly. There's a lot going on. I want to tell you about it. And don't worry, if you can't make it live, we're going to send you the full recording so you can get the detailed forecast either way. But you do have to go click that link. So can't wait to see you all there on August 31st, that last day of the month. So click the link. Thanks to everybody for being with me here today. It was a great session. I loved it. And I cannot wait for you all to go over to Jeffrey and Roger's room. I'm going to give you guys a 10-minute break. You can jump up to your jumping jacks, run around the room, take a drink of water, whatever you need to do. But do not miss
Don't miss out.
very important trend in Bitcoin. Do not miss it. Do not miss it. Do not miss.
Thanks, everyone.
Uranium. Do not miss these trends. So thanks, everybody.
Beautiful
Bye, guys.
opportunities.
Have a good weekend, Celeste.
Great. Thanks. You
Bye,
guys too.
everybody.
And
I'll see you in a
just
few minutes, Jeffrey.
minutes.
Bye,
Have a
guys.
great day, everyone, and a great weekend. We'll see you soon.